Rather bigger week than most as far as the financial markets are concerned this week, with not only the non-farm payrolls coming through on Friday, but also the added excitement of a possible US government shutdown associated with the debt ceiling debacle. Here in the UK, we've got the party conference petty bribery season going on, as well as the Help to Buy initiative, which is being accelerated, presumably in the effort to make sure that the bubble we're seeing in house prices in London will continue to spread right through the country. Going into the charting position at Wolseley, Plumbers Merchant, it can be seen that we've had a rising trend channel here since February. The floor of the channel is currently at £30.60, and the view currently is that with the RSI failure over the past week, we could head back to that zone over the course of October. Although at this stage, probably too early to say that we're looking at a top for the shares. So bearish, at least in the near term, for this stock. On to Tesco, where the grocer has been trying to recover after the ravages of the horse meat scandal earlier in the year, and also as the market waits to see whether the group can get its mojo back on the fundamental front. The recent price action is an unfilled gap through the 50-day moving average, something that suggests that even if you are keen on going long of the stock, you want to see an end-of-day close back above that level before taking the plunge on the long side. The upside here, not really much more than 390, 400 pence. So really, not a great risk-reward trade, but you'd feel more comfortable if you saw the price action back above the 50-day line. Staying in the high street, we're on to Halfords, the auto parts and bikes group. Great charting signal here in the summer, an unfilled gap through the 200-day moving average, which is now at £3.45. That was a starting gun on the attempt to break higher, and so far it's gone well. Rather choppy, but still a positive situation. And the view here really that we're looking at a breakout once probably the results or the update from the group is out of the way, a break to the upside through previous May resistance, just above 400 pence, on to £4.50. And that's a target that's valid while there's no end-of-day close back below the 50-day moving average at £3.77. RSI at 56 looks just about right for going long at or maybe a little bit below current levels. Another stock in an uptrend of late is Electrocomponents. Here we have a rising trend channel in place since the start of the year. Stock probably in a bull flag near the highs of the year, near the £2.80, £2.80 level. The upside here, £3.15, £3.20 at the top of the channel from the start of the year, and we're looking for that to be hit over the next 6 to 8 weeks while there's no end of day close back below the channel and the 50-day moving average at £2.64. Also bullish because of the rising RSI trend line in the oscillator window. Finally, to finish off with a slightly negative picture here. Here is sugar producer Tate Lyle, and we've got a surprisingly extended and bearish top here for the stock since the end of Q1 really this year. Multiple failures over the £8.70 level, final bull trap in July, and then back below the 200-day moving average at £8.18. The risk here is down to the bottom of the December price channel at 700 pence, and that's a target that we could see while there's no break back above the 10-day moving average at £7.65. The only positive at the moment really is that the stock's oversold, but unless we break a July resistance line at 35, really it's just too early to think of bargain hunting this situation.